The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tommy O'Brien, and Daryl Martin.
Welcome, folks. Tommy O'Brien. We do appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials down 20. NASDAQ is off 4. S&Ps are down 4. Gold's up 380 at 12.30. We have silver up 4 cents, $16.31. You got light sweet crude up 25 cents, $46.48 a barrel. 10-year note down 4 ticks. 30-year bond off 14. King dollar up 212 ticks at 98.84. You got the euro at 109. Yen is at 112.80. Bottom line, you had that election baked in. You know.
Yeah. And it seemed like finally, for once, the polls delivered, right?
Yeah, they did.
Yeah.
They did. And if we go over and we take a look, if you actually take a look at it's intriguing too, because if we take a look at the euro and the CAT and the UK, it was right there. It's on the 24th. That's when the euro went topside. That's kind of where the move happened. If we take,
and was that was the first election? Just to put things, that was the.
Was it? I didn't know what it was. Yeah. See that? Okay. So that was the first election. So that's because
that was, I think, the scariest in that they weren't sure of trying to poll
right.
4 people. There was more uncertainty coming in there. Where once I think it was pared down to the 2, they had more confidence in the polls and what to expect.
Right. So that's it. Because the way to see this, folks. Okay. You know, last night I was doing the workshop. And, you know, the bottom line is that there wasn't volatility out here at all, either, up or down. So you gapped up on the 24th. If you go over to the CAT and you look at just about every index, look at that. Yeah, that was it. The 24th.
Sure.
That gapped. This is the CAT 40. It gapped in a huge way.
Yeah.
You know, now, if we go into, now this is what's going to get intriguing here. So the euro... bottom line, you know, was down 51.6. This euro still wants higher price. That's my take on it. Is that this is not a big back down. You know, the euro would have to come down to like 108.29 to approximately that's this peak. Yeah, 108.29 to get in the lower range. You know, so you know it got to 110 today. Bottom line is that what's game out here is this 111 up on the other side.
Which is the other election, to put things that's going back to Donald Trump. So
yes,
it's just every marker is an election.
It is.
You know,
it is.
Yeah.
It is, because if we go to our dollar, that's exactly what it is. You go to our dollar, that's exactly what it's trying to get into. It's
when the environment's been changing,
or
not changing,
right? Yeah. And it's, you know, the top of that November 9th area is 98.415, and we hit 98.355 today.
Sure.
You know, this thing wants, to my take, we want to get out of the bottom of that. So this is going to be intriguing watching this whole thing shake out. Now, silver still hasn't caught a bid. And folks, if you haven't test drove the Nadex platform, great time to do it. Come over to our website at TFNN.com. You can bring up the platform and walk along with us as we trade these defined option contracts. And of course, since the beginning of the week, bottom line is that you have weeklies that line up too.
You know, I pulled them up in that, you know...
And your update?
Yeah, in my 9 a.m. update, just kind of checking out. And John Logan, we talked to him. He's been on a little hiatus traveling through Asia, but he is going to be back tomorrow morning, 9 before 9. We're going to get him in that chair 5 days a week.
Okay.
But so here are the binaries on the weekly basis. So we're looking at Friday's 4:15 expiration, 4 days and 6 hours, essentially.
Yeah.
And, you know, I had taken a peek at the VIX as well, just jumping over to the VIX. Look at that, still climbing down.
Laying at $10.
You know, when I was looking at it, it was at 10:45, 10:50 pre-market. Yeah, coming right into 9 o'clock. And yeah, flirting with $10. So guess what that means? No premiums, right? And pretty cheap prices. You know, if you want to trade for volatility when there's no volatility priced into the market, you're going to be able to get affordable prices. And yeah, you know, you're even looking at 26 points to the upside, right?
Yeah.
Risking 1 to make almost 9, risking 11 to make 89 on a weekly basis.
That's intense.
There's no premium in that market, in terms
and
of,
just the opposite too. The other
side, same thing. I mean, you're looking at only 21 points to the downside, and you're risking about 18 to make 82. So, if you want to make those types of outlier type, not outliers even, right? You're only talking about 1% up or down on a weekly basis. But the market is not expecting volatility. So if you trade for volatility when the market's not expecting it, you'll get some good bargains for sure.
Unreal.
Yeah.
Daryl Martin, what's going on?
How you doing today?
Morning, Daryl.
Great. Yourself, man?
Doing fantastic.
Hey, where's the volatility, man? With that.
Right? Like what we thought we were gonna have a whole lot from the elections, and it's just like, okay.
Yeah, and it's just laying there. The whole market is just laying there, folks. And what's going to get intriguing out here is that when I just did the update, the S&Ps and the Nasdaq, they tested their highs again. They closed at their highs, and normally, you close at your highs on a Friday. There's no reason you can't blow those things through. And
sure.
Bottom line is that they didn't. So now the question is going to be, can you come off those highs with volume? Because if we just lay here, man, it's like, okay, what's going to be the next event?
Because
everything was drop it all down. Yeah.
Right.
Yeah.
Because everything was priced in there, I guess, and that was like a non-event.
No,
right?
Totally. And the VIX is saying to us that everyone's complacent, and so there's not sellers. That's
definitely.
They're saying, hey, I can go to the freaking beach for the summer, man.
Yeah, nothing's happening. No volatility. everything's nice and peaceful.
You stay right there, folks. Daryl, Tommy, myself, we're coming right back. Our phone number is 877-927-6648. Dow Industrials down 31. Nasdaq is off 6. S&Ps are down 5. We're going to break back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Tommy O'Brien, Daryl Martin, Tom O'Brien. We do appreciate you growling and prowling with us out here. And, folks, if you haven't tested the Nadex platform, great time to do it. Come over to our website at TFNN. You can hit that Nadex banner, bring up the platform, and you can walk along with us as we take a look at these defined option contracts. Daryl, let me ask you, I know, we were talking about this a long time ago, when there was no volatility in the marketplace. When there's no volatility in the marketplace, what do you like to trade?
When there's no volatility in the marketplace, like when the implied volatility is low.
Yes.
The nice thing about that is there are a ton of contracts that will be available, basically, that will mirror the market, even the lower cost ones.
Okay.
So a lot of times you have to go more for the dailies.
Yeah. Okay. That's
to
right.
Get the lower premium contracts.
Yeah.
But I have copper up here. Let me switch over to, let's say, oil. A little more commonly traded. So, on oil right here, I mean, we're talking about contracts that, what you're looking for is that close proximity. So I choose near the market here on my scanner.
Yes.
And so, we have contracts that expire in 40 minutes and an hour and 40 minutes and 4 hours.
You know what, Daryl, just so I don't think we have your chart in the den yet to see anything.
Oh, okay. Well, let me click one more button, and I will fix that. Right there.
There we go.
Be showing in the den.
Okay, cool.
All right, and to get the coffee going, So, we got 40 minutes, hour and 40 minutes, and 4 hours, and I just chose near the market, so that just means really close to where the underlying market is what the bid offer is. Okay, so the closer that bid offer is to the underlying market, the better, as far as speed when choosing a contract. And so when you have low volatility, it's really easy to find those contracts. And the cool thing is, a lot of times I'm not in a trade for more than an hour myself.
Right.
And so I can go in here, and I mean, this contract right here is only 3 ticks away from the market, which means it's going to trade pretty much par on par. And I have a $40 risk for 110 tick upside on oil right now. And oil's just moving up at the moment.
Yep.
So I mean, that's a fantastic risk reward. That's better than a binary trade that you're ever going to find, and you're getting a tick for tick move.
Right.
So, and then I can go down here. I can even look at some of these, and if I want to have a whole lot of room to move, I mean, this one's a maximum $69 risk. Now that's if I held the trade like this blindly and let it go all the way against me. Okay.
Yep.
And I have 233 ticks upside, and that's for 4 hours.
That's pretty cool because you can see. So I'm just looking at everything, right? So it's trading right now at 46.63, and you can see the bid offer is 46.64 by 46.66, where it's almost essentially at market, with that kind of huge risk reward. And it's like, the market's kind of saying there, Daryl, right, where 67 cents of downside risk is kind of, just because there's so little volatility priced in, is kind of enough volatility to the downside that they're not going to make you really pay for that risk reward of risking 1 to make 4. But guess what? That's where if you're trading expecting more volatility than that, then, and you get a rise, then that's pretty phenomenal. You can lock in at almost market where you're paying 3 ticks maybe of premium for risking 1 to make 4 if you get some serious volatility. And oil, man, if we ever got a week like last week,
and even on the flip side, we got one over here for $47 a risk with $5 of premium, with a $452 upside to the down. I mean, so it's both directions. It's not just like they're pricing in one side or the other.
There's so much going on right now too. We were just looking at, so you have Yates talking to Congress at 2:30. That really shouldn't probably tie into oil, but that could definitely tie into the market.
Into the marketplace.
Well,
but then
and this is fantastic. I mean, we're talking, the market's moved like right now, 45.80, 46.60. I mean, we're talking, what is that, 60 pips? 80 pips. 80 pips of movement.
Yep.
And on oil right here, I got a oil chart. I'm trying to grab it so I can bring it over, but it's taking a second.
No, because you have OPEC, I was just going to say, coming at the end of this month, May 25th, I think, is their other meeting, their next meeting. So at some point, speculation is going to start creeping into what's going to happen there in the oil market. And it probably already did last week, really, but...
And I mean, right there, check that out. I mean, oil is like, I mean, it's moved 80 ticks today. You know, that's a $800 move. So
yeah.
And I mean, we got like very low volatility, so there's plenty of choices.
Yes.
And the cool thing again is you're not paying for a lot of premium. So if you go in to trade this, especially if you're trading like say this contract right here, this would be sort of these would be my picks personally. And you go in, you're trading those contracts. You got tons of upside. You got very low downside.
Yep.
And
you already had oil reject lower price last week. They trashed oil, which is really that's what's so cool about this right now.
It's
too.
quite a move last week. I mean, just huge volatility and huge downside. Yeah.
Yeah, and then if let's say you have like this, like I really think oil's just going to crash on back down today.
Yeah.
Let's say that's your move. You think it's coming in the next couple hours. They're just waiting to set everybody up. Whatever your opinion is. I mean, or to say in the next hour, you could go in and like you could sell this contract. This is sort of a cool, probably one of my favorite. It's actually my favorite thing. It's the first thing I ever came up with Nadex, just because I was naturally a futures and options and forex trader before I found out about Nadex. Okay, traded equity options, and the best way I can describe this, I can visually show you, is right here. Let's say you were gonna go. We'll just say short oil, okay?
Yeah.
Then you could choose, like, say, the master spread if you wanted to, okay? Or let's go with the cheaper one because that's even a better, risk reward there, right? And if you wanted to lower the risk even further, like that's a $51 risk. So, and it's only $1 a tick. So maybe you're doing 10 of them. So now that comes a $500 risk. Maybe you're not comfortable with that. Well, I can put on a hedge, okay? So right over here for $34. Now, does it cost me $34 is the question. And the real answer is no when I combine the two together, okay? Here's my risk on a hedge. So my real position is I think the market's going short.
Yeah.
Right? My risk is the difference between where I buy this one and sell this one.
46.52 and 46.
Yeah, 46.62 and 46.53 about.
Right.
So about 9 ticks. Okay, so $9. So if I put those two contracts together, and I did 10 to equal an actual full-size oil contract.
Yeah.
Okay, we're talking about a $90 risk. Okay, literally a $90 risk on oil, like a full oil future, equivalent, and it can go 112 ticks against me, which is $1,120 move against me on a full-size oil contract, so 10 contracts. So I'm taking $90 of risk to fade oil. Okay, who wouldn't have a 9-tip stock, right? And it could literally move $1,000 against me, and I'd still be okay.
That's pretty
We'll
cool.
talk about it when we get back. This is my favorite thing on Nadex.
You should do a whole show on those double-sided.
Seriously.
For sure, seriously.
And we will.
Yeah.
You stay right there, folks. Daryl, Tony, and myself, we're coming right back. Dow's down 21. Nasdaq is off 7. S&Ps are down 5. We're going to be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Tommy O'Brien, Daryl Martin, Tom O'Brien. We do appreciate you growling a problem with us out here. Daryl, when we look at this trade now, right?
Okay,
So-
and I actually put the trade on just to show, how little fear I have on this trade. Okay? I mean, I just you know what? Let's go short. Okay?
Yeah.
So, and for whatever reason, whatever your chart says, whatever, okay? And one thing that you'll notice as we go back and forth on this trade is my profit and loss, it may pop around for a second, but should never really exceed the net between my profit on my long and the profit on my short and the loss on my long in this case, or vice versa, should never exceed $90.
Right.
Okay. So right here, I'm going in and I go short. I went short the master contract, and the benefit of doing I didn't have to do the master, but or actually I did.
You did the $5 one, right?
I did the $5. Yeah, the $5 one. Because the master would have required a lot more money. So I went short this one. I only had to put up $590 to do the contract.
Sure. So it's 59 cents away from the top of that box.
If you go trade oil, you're putting up $500 to $1,000 for an intraday if you have intraday margins at your broker. Okay, so that's right on par with what you'd be paying at, like an AMP or an intraday brokerage or whatever. Okay, so we're not putting up more money than we putting up really to trade the futures anyway. To go short.
Sure.
And I went short. It's like 5 ticks off where the market is.
Sure.
All right. And then I did basically I went in and I did a married call for you option traders out there. Okay. And that just means I went in and I bought an option to protect, the opposite side in case I'm wrong.
A certain amount of the opposite side. Right.
Exactly. And it'll protect me up to 47.75, up to the ceiling of that contract.
Yes.
Okay. And you can visually see it here on the graph. That's what this graph
is. Which is $1.50. So you have a $5 shot, $1.50 long.
Yeah, exactly. So it can go pretty far against me, and that's a big stop. I would not go in personally as a trader and go short oil and put $1.50 stop in.
No, I'm with you. Now that contract cost you how much?
That contract cost me. I bought it like it was like $30 when I got it.
$30. Okay, cool.
Okay.
So I get it. So if you're right in the context, let's say that this is a great example, folks, that he's just set up here. So that would mean that you'll start making money. Let's say the trade goes with you and oil goes down. You're going to start making money after a 30-cent move.
Right.
Because
exactly.
that's
the one thing that has to happen, and some people don't get this. The one thing that has to happen is I got to lose the max money on my option because that's my insurance premium.
That's right. Exactly. And that only cost you 30 cents, though.
Right. And then I got to sort of make that back.
Exactly. Right.
Okay. So we are talking about, it has to move about 60 cents before I'm really making, really making some money. Okay. Now, I'll actually pick up some before that just because of how premium works.
Yep.
But as it keeps going down, so let's say I think it's going to go back down near the low of the day. Okay?
Yes.
So right there at 40, what is that, 46.80, something like that. That's pretty close to 45.73 is the half deviation mark. So let's say it pulls back down to that level, then I have a really nice profitable trade. But as this thing oscillates for the next hour and a half, then as long as it doesn't go all the way up 100 and basically 50 ticks against me,
yes,
okay, which is a big move, my risk on this trade is not greater than $90.
Right.
It never will be greater than $90. And I mean, see, it's flying up right now. If I was in that trade,
yep,
I'd be freaking out a little bit right now, right?
yeah.
So I'd be like, oh, I need to get out, whatever. I definitely have a stop already where that's at. Okay, but let's check out my risk and reward. Oh, I got another trade on, but ignore that one at the moment. But the 170, so I mean, like it's basically at $90. 90, 100. Just like I said, bid offer spread, moving around a little bit. Got some helicopter coming in, but but right there, look at that, making 160, losing 200. I mean, it's $40 difference. Okay, I mean that's
the thing is moving.
Yeah, oil's getting some action right now, right?
Yeah. So I'm doing some other trades on the side here, but anyway, so that right there, I mean, right now, I'm down $60, $50, $30. But see, like I have the hedge.
No, I'm with you. Right.
So in a sense, I'm, and this is sort of funny, but I'm bored. Right, I'm waiting for oil to move down, and anytime you enter a trade, you should always accept your risk, right? Say, this is what I'm willing to lose on the trade.
Sure.
Well, the lower I can make that, the better I feel.
Right.
Personally, right? And I don't make bad decisions whenever my risk is lower, right? So whenever my risk is in check according to my account size, okay?
Yep.
So, I mean, right now, I'm down 50, but that number really isn't going to go above, like I said, it may go like, say, $100 or whatever.
No, I'm with you.
Things are flying. But at the end of the day, like if this thing just settles, okay, $90. And so I'm really not watching every tick. My heartbeat isn't going up and down as the market moves. When that market flew up for a second there, like literally my heartbeat didn't raise at all. And that is so huge for us as traders, I mean, just to be able to have that calm, in the middle of the storm here while we're trying to ride these waves. And
now the difference, though, that we also got to make sure that people know that hedge that you have there, that is only good. You had one side on for a few hours and another side just for 1 hour, wasn't it?
Exactly. So this contract can expire at this point now like an hour.
Yeah.
Okay.
Okay.
So, well, it doesn't show the minutes until we get.
No. So you want to get out of that? I'm with you.
I have
right.
an hour and a half.
Yep.
So I mean, if the thing hasn't moved my favor in an hour and a half, do I still want to be in the trade anyway? No.
No, you're right. No, I see it. I just want to make sure the audience knew that. Okay, it's not a full match all day long.
Sure.
Exactly. Now, I mean, like right now, if I decide to get out, I'd have a $50 loss in the trade. That's nothing on oil. $50 on
it's not.
Contract where I can make $1,000 a point.
Right.
Right. So, if I can just get this message, if people that are listening will just really, really soak in what I'm saying right now, especially you future traders out there.
Yeah.
Okay. Is I can't lose more than $90 on this oil future contract, and I have a $1,500 stop loss.
Right.
For the next hour and a half.
Right.
And I can do this on every contract that's on. I mean, I can do this on the Dow, NASDAQ, S&P, gold, silver, copper, coin. I can do this on FX traders. I do this on euro dollar, pound dollar, Aussie dollar, pound. I mean, all of the contracts on Nadex, I can do this on.
Right.
So it makes it like whenever I found out about Nadex the first time, I mean, we're talking like 7 years ago, okay? And I was drilling them and like, what is this really? And, because I was all, skeptical. And when I walked away, I was floating on cloud 9. I'm like, oh my gosh, I just found a contract where I can mirror futures and I can hedge my futures trades with a daily or intraday expiration, which means that I get if you know anything about options, what's called maximum delta, which means moving at speed of market type thing. I can get minimum theta, which means I'm not paying a ton of premium.
Yeah.
We'll keep talking. This is it's so huge. If you grab this, you'll love Nadex. It's awesome.
Perfect.
Stay right there, folks. Tommy, Darryl, myself, we're coming right back. Dow Industrials right now down 15, Nasdaq's off 6, S&P's are down 4.5. We're going to be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. And folks, if you haven't test drove the Nadex platform, great time to do it. Come over to our website at TFNN, hit that Banner, bring up the platform. We're walking through a trade right now, an oil trade that's actually on both sides of it, which is a pretty cool deal here.
Okay, so what we're doing is, I have a chart up, and this honestly wouldn't have been my first choice on a short trade, but it's actually working out really well. It's what I would actually look for in a short trade. We got in a little bit earlier than I normally would have, but we got it actually up here. Okay, so I was like, hey, it's starting to tick down. Let's just take it. And, for whatever, because there's 1,000 reasons people take trades. So, and I'm trying to show how universal the strategy is.
Right.
So it doesn't matter, who you're following or what you're doing. This is something you can do if you like to trade futures, or if you've wanted to trade futures and you've been nervous about, which, rightfully so, about the massive, risk you're taking.
Leverage, sure.
Yeah,
right.
the leverage is huge. You're controlling, 50 barrels of oil. That's a lot of oil. That's just 100 barrels of oil on a full-size contract. And so you're talking 56 grand, 40, or I guess at the moment $46,000, and you're putting $500 to $1,000,
right.
And oil can move $3 or $4 in a heartbeat. We've all seen it here on half.
We saw it last week. You don't have to go too far back. What, 3 days?
Yeah,
right.
Yeah, and so what I'm doing right here is I just said let's go short oil, and we had an awesome contract where we only had to put up like $40 to do the trade. It's like $40-$50. And it was 4 ticks away from the market. So we're talking, what that means is the bid right here is 4 ticks away from where oil's actually quoting.
And that's pretty amazing, folks, because he was close to the top of the box, number one, and you were still only 4 ticks away, we started this whole conversation out that the volatility is so low in the marketplace right now.
Those risk rewards.
Yeah, every contract on here is like really low,
right.
Volatility on the market. I could have got a cheaper contract too, by the way, but I wanted one that was, sort of close to the market there.
Sure.
And so there's even better options I probably could have chosen, but I wanted to show hey, let's choose this near the market because we have so many cheap near the markets. And so I went in, and the risk on the trade is going to be, and just a reminder, very simple formula, the difference between where you buy one and where you sell the other.
Sure.
Okay? Because people think, well, is my risk like 59 times 10 plus, $30 times 10? No, it's ultimately, as long as I exit before this trade expires here in, an hour and a half or so, okay, then my risk is not going to be greater than the difference in those prices. So we're talking, $8 actually. So on our fills. And
Daryl, just to spell it out too, because so what happens is, the short one cost you, let's say, $50, right? You're 50 ticks away from the top, and the long one cost about $30 per contract, correct?
Exactly.
So that $30, that's really kind of all you're giving up to have that insurance, right?
I know.
So what happens is when you actually, let's say that you do make that short trade and that the market just immediately starts cascading down and goes in your direction, if you had not had that kind of second trade on, the only difference is that you now have, 30 cents of movement where you're just kind of recouping the cost of your insurance before you enter into a profitable position. Is that correct?
That is 100% correct.
Perfect. And that's just that. Right.
But the cool part is to add in, just a big thing to add in, is the 30 cents is the cost of my insurance to recoup. So that's not that's 30 cents is nothing in oil.
Sure.
Okay, we've done that while we've been on the air.
Yeah.
Okay.
Right.
To limit your loss to 9 cents, it's definitely nothing.
But my actual risk is 9 cents.
Right.
And my stop loss is the ceiling of the trade, since I went short and I bought as a hedge.
Right.
So we're talking 40, 70, 75. So if I go over here, let me just grab like a simple, let's see, 10. Oh, I have to have a.
Because when you say stop loss, though, and that's why I wanted to spell it out, you're actually making money on the tail end of that one as well.
I actually, that's one of the things I actually didn't bring up was, if you look at this risk reward section here is as much profit as there is, because there's $124 of profit in this. Okay. So if it actually did fly up, then it'd have to fly up, 58 ticks above, where I got it. Which, again, not a big move on oil.
Right.
We've done 80 plus ticks today.
Definitely in the realm of possible, right?
Yeah.
But if it flew all the way up there and I got out my stop loss, that protects me $1,200, against, the market moving, or $1,500 against the market moving against me. My stop loss would actually end up making money.
Yeah. No, it does.
So
it makes a lot of money.
whether the market goes down or the market goes up, I will profit on this trade. And if it just stays flat in this little range,
that's where your 90 bucks gets lost. Right?
I lose 90 bucks.
Yeah.
And that's not again on 10. It could be $9.
Right.
So if you have a
It's
little
$9
account,
per contract.
I know.
You could trade, right? No, pretty cool, man.
$9 if you have a little account. That's your risk.
Right.
Okay. If you have a bigger account, 90 or 900. Okay. But I can make money if it flies one way or the other. Money is going to be in my pocket.
Yeah.
If it doesn't,
the visual parts was so cool, man. So you're going short, and your insurance, your real trade, let's say, cost you $50, as in the short one. Your insurance costs you $30. So as in, if you go negative, you need to make up your insurance. So you need to make up that 30 cents. And guess what? If it goes to the positive side, then what do you need to make up before you gain positive, profit? You need to make up the 50 cents from where it is, and then you'd actually have some profit.
Then I got 70 more ticks of profit, which is $700.
Pretty cool, man.
So we're talking $700 to the ups if it flies up that I could potentially profit. We're talking 4,400 and let's take away the 30. 4,110. Okay, to the downside if the market were just to just bottom and fly.
And
there's for a $90 risk.
There's a lot going on. We got cell phones going everywhere. But I was gonna say with OPEC.
I thought a commercial was coming up.
with OPEC coming out the 25th. I mean, you just never know when there might be some type of announcement from an OPEC country
for sure
ahead of that meeting.
And this is a fun trade to do on OPEC, especially if you can pull off. I mean, let's see, could we pull this off? All right, here's a question. Let's say OPEC was coming out. Look at that. We could go in there, and that's a nice, that has to move like $1. Okay, but OPEC, I mean, it can move $2 or $3, right?
And we might see the premium go up on these as we inch closer to that date, for sure.
So, but on this, let's just say it was somewhere around that right now, just so people can see. Now, we're talking $1 move requirement, really, for us to start making money, okay? But, I mean, we're still talking right now a $9 risk, okay, on the trade. And we have, if we did 10 contracts, a $2,400 upside and a $4,400 downside profit potential on the trade if the market flies in either direction. Now, again, we're locked into that $90 risk until it moves, okay? So what I like about this, the biggest thing I like about this trade is I've accepted my risk. I'm risking $90, but I don't have to take my stop at all. Right. I can just sit here. And now at the end of an hour and 40 minutes, I'm going to have to make a decision or put another hedge on or whatever.
Right.
Okay, so I don't increase my risk. So I may just close out and say, there's my $50 or $90. Or I may put on another contract to hedge it off. There's plenty of options of what I can do. But for the next hour and 40 minutes, I can sit here and I can eat my cereal and do nothing.
No, it was a good discussion because people can get that and then they can go play with that demo, open a demo account, start putting multiple trades on, and then you'll at least have a nice base to say what you're going to build for.
Big time.
Yeah.
You stay right there, folks. Daryl, Tony, myself, we're coming right back. We got Mike from Somerville on the line. Dow right now is down 22. Nasdaq is down 3. S&Ps are off 5. We're going to be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Daryl Martin, Tom O'Brien, Tommy O'Brien. We do appreciate you growling a problem with us out there. Right now, we have the Dow down 32, Nasdaq's off 9, S&Ps are off 6.5. And I do know what Mike wanted to look at. He wanted to look at the LABD, which is the direction 300% inverse correlation of the S&P Biotech Index. So if we go over to the IBB, we take a look at this. This little baby's going south with some juice. You know,
thinking Black Eyed Peas. I'm a B myself.
I didn't hear what he said.
The Black Eyed Peas, yeah.
Okay. We're shorting them too? No, I don't know. Okay.
No, you can't short those guys. Yeah, but okay. So when this goes south, LABD. I mean, if you're into that, Mike. Bottom line is that you can put a stop right underneath the low of today.
It's quite an opening bar.
It is.
IBB,
it is. And just as we're coming over here, you know, if we go back to that IBB, it looks like it wants to go break this lower swing point from this morning. That's 292.61. Yeah, it's broken. It's 292.43 right now. And you got some juice underneath it. Right now, that bar has 19,000 shares versus 17,000. So that's some action. LABD, so we go back to this for a second. And, you know, this thing can run to like 1061. You're at 1038 right now.
Right next to it.
Yeah, totally.
What was interesting, I saw even some of the news, and I think it went away, but they had the Saudi oil minister was already talking about extending OPEC cuts. So it's interesting that already across the news was coming. Just as we came back from that break, I saw it.
Oh, yeah.
Which is interesting.
Oh, they're trying to make a deal.
There's already the oil ministers out there saying, you know, whatever they want to say. And we still have a good 2-3 weeks, but
they're trying to make a deal with Russia right now because they're freaking because it went down so dramatically.
Okay.
Oil says that Saudi Arabia, Russia say cuts may last into 2018.
Right.
They're both scrambling, man. They're going to be like the best buddies in the world.
That's it, yeah. Last week was a big week, right?
Yeah, right. You know, you go from $50 to $45. Both of those economies need that money. You know,
especially because we hung around that $50 number for so long.
We did.
It was quite a break away from it last week.
Oh yeah, listen, and the gasoline. You know, what you had there, folks, is that you know the gasoline broke down also. And it's like, okay, we're coming into driving season. Gasoline is getting very inexpensive. You know, and this is going to need more than that. You know, I like the rejection of price last week, but you know today. It's having a hard time getting into this higher price. You're probably going to be making money on that trade, Daryl.
I'm all about it.
Yeah, listen, why not?
Who isn't? Right?
Yeah, totally, man. Yeah. Totally.
I mean, it keeps pushing down. If it breaks that level with some volume, we're going to get a nice drop.
Exactly. Because what happens, folks, is that when you get 2 downdrafts, which we got last week on Wednesday and then on Friday, I remember I was talking about the people load up again. It's like, oh, get stopped. And it's like, hey, that flush out, that looked like it was a large flush out. Let's put it that way. So I can picture why people went right back in.
Sure.
No doubt about it.
But,
Folks,
I'm literally sitting here relaxed, bored, in a full oil contract with a $1,700 stop loss, and the most I can lose is $90. I'm just watching the market.
That way you're making smart decisions.
That's pretty
and
intense.
not emotional.
It really is.
You can't let people. You can't.
Right.
You should be making trades where you're comfortable with the risk.
With that much leverage, that you only could lose $90 is pretty incredible.
And it's 90 per 10 contracts.
Right.
A lot of people are trading single contracts, so I like you.
Yeah.
$9.
I see people talking in the room about right now, the Tiger Den, about ES, NQ, YM, gold.
Do it all.
You can do it on
Get in
all
there,
of them.
get in that demo account, start playing with the multiple, and that's really where when you're doing the multiples, play with that in the demo because you'll really get comfortable before you put your money at risk.
Totally. You stay right there, folks. Miss Basil Chapman's coming up next. Of course, then we're going to Think of Swim headquarters. Daryl, thanks so much. Have a great one. Have a safe one, man.
You too. Thank you.
Thanks, man. Thanks, man.
Wow! Go get him, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.